Today, we will work on swing trading. I was getting so many mails and questions about swing trading. I hope this video will be useful for you. We will do a full top-down analysis and how to use some indicators with price action. We will cover so many concepts in this video: breakers, order blocks, rejection blocks, imbalances, premium discount, and so on. We have so much to do. If you're ready, let's do it. Welcome our free trading course, all about price action trading strategies and smart money concepts. If you love scalping and day trading or even swing trading, check out my free trading course. You can find the links on Google Drive or directly from my website, which is in the description. And please try to watch videos in order to fully understand everything. Okay, let's talk about swing trading today. I have a very useful indicator which is called Williams percent range. This is a simple market sentiment indicator based on oversold and overbought. It can give us momentum ideas. Again, we only use it for an idea. We never use it for trade decisions. For the settings, it is quite straightforward. I set the look back period to 15. The rest of the settings are as you can see. I set visuals like this. It depends on your style. I like simple colors. I do not enjoy so many colors in my chart. So, how to use it for our swing trading purpose? First of all, let's understand the indicator. So the part above the 50 is our premium area where the price is becoming slowly overbought. And the part below is our discount area where the price is becoming slowly oversold. If the price is extremely overbought and momentum starts to shift to discount area, we look for short trades. If the price is extremely oversold and momentum starts to shift to the premium area, then we look for long trades. This indicator is only for high time frames like daily. Other than that, it will be very noisy and unclear. So imagine that you are a swing trader who enjoys trading uptrends. Once the price makes a new break, we identify our discount and premium area and start our price action analysis. We make our classic smart money analysis in high time frames. We look for liquidity, imbalances, order blocks, optimal trade entries, and all other needed structures and define our overall entry point. Before your entry, for extra confirmation, you can check this indicator if the price is in the discount area, if it is oversold, or if the momentum shifts upwards. This only gives you another slight idea. That's it. In this case, imagine there is a bearish trend and you are looking for a short entry. Just like in the previous example, do your complete price action analysis without the indicator. Breaks, premium discounts, liquidity, order blocks, imbalances, optimal trade entries, and all needed structures. As a final and extra confluence, see if the price is overbought or shifting momentum to the discount area. My final verdict: indicators are only for analyzing things faster or extra confirmation. We never ever place an entry based on an indicator. For the final case, there are ranges. You already have a great knowledge about trading ranges, basically focusing on supply and demand areas such as breaker blocks or mitigation blocks. So, as a final confluence, you may add one more step to your analysis and trading. Our Williams percent range, checking the oversold and overbought with momentum shifts between premium and discount. Let's check out a practical trading example. Let's work with the Euro USD chart. Again, it is all the same with Bitcoin, Ethereum, gold, or whatever you trade. It makes no difference. First of all, if your trading style is swing trading, I suggest you start with monthly charts and identify the key points in the monthly. Keep looking to the left of your chart and identify key price action structures. It may sound ridiculous, but around the 2000s, there was a major market structure shift that started an almost 10 years rally. Until 2008, the mega real estate crash. Now, I want you to notice this imbalance and clear equal lows, and how the price reacts very strongly. You may ask this question: how come a 20 years old imbalance can be still active? The answer is so simple. Smart money, also known as big funds, banks, hedge funds, and investors with big capital, all these people operate and make main decisions with monthly, weekly, and daily charts. They also operate in lower time frames, but with algorithmic, high-frequency trading bots that quickly buys and sells, all automated systems. As a swing trader, you must check monthly, weekly, and daily charts. Let's check out the daily chart. The moment the monthly imbalance is tapped, the price very strongly rejects the level and starts a shift in the market structure on a daily level. This is the time we have some confirmations and some facts that we can work on and make new trading decisions. Once the price deepens, you'll notice that Williams percent range gives us an oversold confirmation. You just place an entry here, become rich the next day, and start driving a Lambo. This is how simple trading is. All jokes aside, let's check the 4-hour time frame. When we look at the 4-hour time frame, everything becomes much clearer. Now we can identify a clear trading setup and find ourselves a suitable entry point. First of all, drawing my premium and discount array to make entry decisions. And obviously, the extremely clear imbalance. Even after years of trading, these imbalances never fail to impress me. I do not know anything else that gives much precision to our trades. At the bottom, this week is called the rejection block. Do not bother so much, we'll talk about it in the upcoming lectures. And right above, there is the order block. There are two clear targets for this trade. Two open liquidity points above, that waiting to be taken out. If you analyze the chart furthermore and use your Fibonacci tool, you'll notice optimal trade entry also collides with our demands and imbalance. So we got too many confluences and confirmations at the same price level. At this point, you can try two types of entries, a tighter stop loss entry, using the previous swing low as our stop loss, or the other one that will give you much more cushion and the room to breathe. This all depends on your risk appetite. I think this practical trade clears questions about swing trading. Actually, what we did here has no difference with our 15-minute or 1-minute day trades or scalping. All the same, just using higher time frames. Okay folks, I hope this swing trading method improve your speed of analysis for the price action trading. As you know, smart money trading is fractal and can be used with any time frames. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon guys.